Hello everyone, welcome back to Lab for Crypto. Today we're going to have a discussion about the recent performance of Bitcoin, which is 24.31% up in the last 14 days, and deep dive into the split of the crypto community right now. So the one camp believes that Bitcoin should retrace hard between 40 and 45K, and the other camp that Bitcoin should continue to go up to the all-time high as we approach the Bitcoin halving. And in my opinion, there is no way for someone to know for sure and time the market. But you need to have a plan. You need to have a strategy that you will follow and stick to it as things start to become heated, even on the downside or on the upside. Therefore, we are going to have a discussion about the free float MVRV, which is a strategy that Ryan, the CEO of Messari, explained and mentioned at his Twitter for his Twitter followers. And I'm going to explain to you how this strategy works. Of course, we have always our strategy, which I explained in detail before, and you can watch the video, which is our risk metric, which help us decide our next move. But this video is going to be about the split of the crypto community and explain why, and then explain the strategy that Ryan mentioned on his Twitter account. Let's dive in. As always, I'm going to explain the free float supply and then quickly touch on the market value to realized value ratio. The reason that I'm saying quickly is because I have covered the MVRV ratio before in detail, so I will have the link in the description below if you want to have a more in-depth understanding of this ratio. But for the purposes of this video, I will explain quickly the equation, the free float supply, and you will immediately understand the accumulation region, the hold, and the exit region based on Ryan's strategy, of course. And now I will move to the explanation of the separation between the crypto industry, which believes Bitcoin should go to all-time high, and the other one which expects a big dump on the Bitcoin price. Using Google Trends, we can estimate the interest over time for a search term. And worldwide currently now, Bitcoin is at 22 out of 100, which 100 is the peak of the interest and 0 is the lowest point. And therefore, the one camp of the crypto industry believes, because retail investors have not joined the crypto market yet, and as we approach the bullish news for Bitcoin halving and the fact that Bitcoin will become even more scarce than gold and real estate after the Bitcoin halving, this combination will lead to all-time highs. And now I'm going to go to the other camp, which believes, due to the fact that currently we see macroeconomic factors signaling that major economies are entering recession, like UK and Japan, Bitcoin has to retrace back to a lower value, establish a footing, and then go to higher prices. And in general, no one knows what is going to happen. Therefore, it's crucial to have your own strategy and decide the regions which you are going to accumulate, hold, or exit the market. Let's explain the model in more detail. The term free float refers to Bitcoin free float supply, which is equal to the current supply of BTC minus the restricted supply. And by restricted supply, we mean the circulating supply of Bitcoin that has not moved for over 5 years. So if we go to supply age bands and hide the other bands and show the 5-year, so that means 22.77% of current Bitcoin supply has not moved for over 5 years. And the reason that we remove this supply is that the likelihood of people selling Bitcoin in the next bull run is low. And the reason for that is twofold. One is they have lost their keys maybe. And the second one is that these people are investors which have a longer time frame. Therefore, they are not planning to sell when Bitcoin is going to a new all-time high, but when they feel that their investment was paid off after 10 years, 15, 20, whatever. Same like real estate, for example, think it like that. Therefore, the Bitcoin free float supply is defined by this equation, and the market value to realized value is something that I will have a link in the description below, which I explain in more detail. But imagine this calculation. When we want to calculate the market value of an asset, we take the circulating supply of this asset and we multiply by its price, the current price. The realized value is calculated differently. Imagine that I moved 1 Bitcoin now because I want to buy a car. The current price of Bitcoin is, let us have a look, 52.3. Therefore, because I was willing to pay 52.3 for a car, in my mind at least, the current value of Bitcoin is that compared to the car that I want to buy. I will never use my Bitcoin for that reason, but I think it's easy to explain what realized value is. And imagine that I bought the car with this 52.2K with 52.28K, which is the price of Bitcoin now. I gave it to the dealer. He gave me the car. But tomorrow, the price of Bitcoin jumped to 60K. Therefore, the market value of the Bitcoin that I gave to the dealer now is 60K, but the realized value is 52.28 because it's calculated based on the time that I made the transaction. Therefore, we can remove these ups and downs from the market value of Bitcoin, which cannot not only go up but also down. Imagine that a black swan event happened and the price of Bitcoin went to 40K. Therefore, the market value now is 40K, but the realized value of that Bitcoin that I transfer is 52.28. That was when I made the transfer to the dealer. Using this model, the free float and the market value to realized value ratio, we create this red line. And I'm going to explain in detail what this line is and how Ryan is using it. In this graph, both the y-axis on the left side and the y-axis on the right side are in a logarithmic scale. The x-axis, as always, is the date. When we mouse over, we can see that the blue color is the price and the red color is the FFMVRV. Let's explain these regions. If we check Ryan tweet, he didn't say anything about the accumulation region or explicitly define the hold region. He only defined the exit region, which is between 2 and 3, and now that we are in the holding region. But we can use the graph to define these regions using educated guesses. The sell region, which is the exit region that Ryan said is perfectly defined between 2 and 3. And now we are in the hold region. The accumulation region historically, it's between 0.4 and 0.7. And you can see the green area rectangle. If one accumulated Bitcoin between these regions, he did an amazing job. In 2011, in 2015, in 2018, also at COVID crash, it briefly touched it, and also in 2022, which was our current bottom in my opinion. Therefore, we define the accumulation region with confidence based on that model. And as we know that we are in hold region, and also we know the exit region, between 0.7 and 2, we have this blue rectangle, which is our hold region. And I think Ryan defined only between 2 and 3 and not higher as previous cycles is because we can see that the FFMVRV value is reducing year by year, basically cycle by cycle. And that maybe is due to diminishing returns or whatever other reason. Therefore, he expects the next Bitcoin top to be between this 2 and 3 region, which was in the last cycle. Because if we go to the first peak of Bitcoin in 2021, it went to 3.09. The second peak was at 2.25. And based, I guess, on his expectation, when it enters this region, he will start exiting the market. But someone can claim that maybe it will never reach the value of 2 and can decide to start exiting the market sooner before approaching the value of 2. And this is the strength, in my opinion, of combining multiple models. And I will explain what I mean. Instead of only relying in one model, you can use this model of FFMVRV in conjunction with other models, for example, our price vs risk, or any other model, in my opinion, that you find it's helpful for your decision. And if these two models are coming to the same conclusion or even close to the same conclusion, it's a good time for you to start taking some actions and optimize your portfolio performance. I hope that I explained the FFMVRV model well. And always you need to have a strategy that is helpful for you and you understand. Because we find something difficult when we don't understand it. And therefore, for you to be better prepared for the next bull run, you better have a strategy and some models that you will follow. And when the time comes, take informed and make informed decisions. Note that you will be able to find this model in our platform and monitor its value every day. And if you found any value in this video, please give us a thumbs up and leave a comment below. I will try to answer any of your questions. Until next time, bye-bye.